Welcome to the Deep Dive. Our goal, simple. We cut through the noise of earnings calls to bring you the strategic insights you need. Today, we're tackling Niagen Bioscience. That's ticker NAE. They had their Q2 2025 earnings call on August 6th, after the bell.
And you really need to understand, this wasn't just your average earnings beat. This felt different. It really seems like a potential re-rating story unfolding. Here you have what looks like a supplement company, right? But it's using its, frankly, incredible cash flow and high margin consumer side to fund something much bigger, a serious pharmaceutical shop.
Okay. Yeah, the market definitely reacted strongly, very bullish. But let's start with the core results, the operational stuff, because the numbers themselves were pretty stellar. They surprised a lot of people.
Right.
Top line revenue, a record $31.1 million. That's a huge 37% jump compared to last year. And I saw some external notes saying that beat expectations by, about 9%? That's a solid beat.
It is. And crucially, the quality of that revenue, it just flowed right down the P&L. It shows real control, I think. I mean, net income landed at $3.6 million, which is great, up from basically nothing last year. But the metric everyone's buzzing about, adjusted EBITDA, hit $5.0 million.
What, $5 million compared to Q2 last year?
Exactly. That's, get this, 221% growth year over year.
Wow. 221%.
That's the number. That's the operating leverage story right there.
Yeah.
It confirms that as they scale up, they're getting much, much more efficient. Expenses just aren't keeping pace with revenue growth.
Okay, so the market isn't just rewarding growth, it's rewarding profitable growth, smart growth. And looking at the balance sheet, that efficiency seems to be giving them a ton of freedom.
A ton, yeah. They ended the quarter holding $60.5 million in cash and, importantly, zero debt. That's huge. It gives them runway, flexibility to chase these, pretty ambitious clinical and pharma goals we need to talk about without running to the market for cash right away.
Let's drill into how they did it this quarter, because hitting 221% EBITDA growth, that means efficiency really kicked in. Gross margin hits 65.0%. That's up 480 basis points year over year. For listeners, maybe translate that. 480 basis points is...
Think of it like this. For every dollar of product they sold, their core profit before overheads went up by almost 5 whole cents compared to last year. That's a big shift. Management pointed mostly to product and business mix being favorable, meaning more high margin stuff, specifically higher e-commerce sales that cuts out the middleman, right?
Yeah.
And continued strong sales of their pharmaceutical-grade Niagen ingredient. That stuff carries a premium.
Right, that high-value mix, you really see it when you break down the segments. The main shoe Niagen consumer business that hit $22.7 million grew 22%. Okay, so, but inside that, the direct e-commerce part, $18.1 million, up 39%. That's them really controlling your destiny, isn't it?
It really is.
Yeah.
And then you have the ingredient business selling to other companies. That was up a phenomenal 135%, pulled in $7.4 million.
Yeah.
And they broke that down. $6 million was food grade, $1.4 million was that high margin pharma grade stuff we mentioned. That diversification, it just adds another layer of strength and profit.
I thought this detail was interesting too. In the e-commerce results, they mentioned the 1,000 milligram version is their fastest growing product now. That seems to line up perfectly with studies and even just user feedback saying you see bigger effects at that higher dose. So customers are actually trading up, which helps revenue per customer, obviously, and sort of validates the science they're pushing.
Yeah, absolutely. And moving beyond just the numbers to sort of the story management was telling is very confident, forceful even. The CEO kept hitting record performance and positioning NAGE as the absolute gold standard in the NAD plus space, really emphasizing their science credentials. And
talk is cheap, but they backed it up where it counts. They raised guidance. Full year 2025 sales growth, they bumped that up, now expecting 22% to 27% growth. That's up from 20 to 25% before.
Right. And what's really interesting, I think, is they're guiding revenue higher while also saying they'll be more efficient.
Yeah.
Selling and marketing costs, S&M, they expect it to go up in dollar terms. Sure, you got to spend to grow. But, and this is key, they expect it to fall as a percentage of sales compared to last year. That's the definition of scaling efficiently, getting more sales for each marketing dollar spent.
Okay, let's shift gears a bit, the strategic stuff. This Niagen Plus, the IV and injectable side, they seem to be making a real push into the clinical channel, moving beyond just pills. How big is that now? What's the plan there?
It's growing fast. Niagen Plus is apparently now in over 800 wellness clinics across the U.S. But the really interesting part is what's next. They're talking about adding telehealth features to their site. And even bigger, launching an at-home injection kit. They mentioned working with Wells Pharmacy Network on that maybe by year end.
Whoa, okay. An at-home kit. That could potentially shake things up, right? Moving from pricey clinics to direct-to-consumer, that's one to watch. They also mentioned some smart branding plays, like a partnership with NutriDrip at the Equinox Hotel in New York.
Yeah, targeting that luxury, high-end wellness consumer, trying to build brand cachet. It all fits together. And if you tie this strategy back to the broader market, you've got this regulatory tailwind helping them.
You mean the NMN situation?
Exactly. NMN, nicotinamide mononucleotide, is a big competitor in the NAD+ space. But the FDA keeps saying it's not a legal dietary ingredient. NM uses nicotinamide riboside, NR, which is patented and generally recognized as safe. So they actually support the FDA's stance on NMN.
And the FDA decision on NMN got pushed back again, right? End of September now.
Yeah, delayed. But NM isn't just waiting around. They're leveraging their patents, their clinical data, their compliant manufacturing, the 503B compounding, to really set themselves apart. This regulatory uncertainty really hurts competitors, frankly. It gives them a clearer runway.
Which brings us to let's call it the big swing potential, the Pharma pipeline. They have this exclusive license from Haukeland University Hospital in Norway, developing NR for Parkinson's disease.
That's the one, Parkinson's disease. This is the hidden biotech play, like we said earlier, the thing the market maybe isn't fully pricing in yet.
So there's a big trial, right? NOPARK, phase 3. Where does that stand?
Okay, so NOPARK completed dosing all its patients back in June. Data analysis is happening right now. They're expecting to publish results sometime in 2026. This is probably the single biggest potential catalyst on the horizon.
Now, I heard something interesting about their strategy if that data is positive. They might not use the exact same molecule for FDA approval in the U.S.
Right, exactly. It's a bit nuanced, but very strategic. If NOPARK is a success, they indicated that for the U.S. market, they'd likely pivot to a slightly different version called nicotinamide riboside triacetate, or NRT.
Why do that? Why switch molecules?
It's basically regulatory strategy. They already sell the current molecule, nicotinamide riboside chloride, NRC, as a supplement here in the U.S. Trying to get that same molecule approved as a drug creates all sorts of regulatory headaches and potentially jeopardizes the existing supplement business. So by pivoting to NRT, a different analog, they sidestep those issues. They can keep the supplement business clean. They'd still leverage the positive NOPARK data from the NRC molecule, but they'd need to do what are called bridging studies to show the FDA that NRT acts similarly in the body.
Got it. So use the Norway trial data as proof of concept, then potentially bring NRT forward in the US, maybe even seek approval for the original NRC molecule in Europe where the rules might be different. And they mentioned setting up a separate subsidiary for these drug rights.
They did. Gives them options, partnerships, licensing, maybe even a spin out down the line. Maximum flexibility.
Okay. And Parkinson's isn't the only iron in the fire, scientifically speaking.
No, definitely not. They highlighted other ongoing external research that boosts their credibility. There's a Harvard study on long COVID using their NR that's already submitted for peer review, and other work looking at fertility and reproductive health. So even separate from Parkinson's, there's this constant drumbeat of clinical work supporting the science behind NR. That itself builds value.
All right, let's switch gears to our final segment, and let me be crystal clear. What follows is absolutely not investment advice. This is purely for discussion, maybe a bit of entertainment, based on analyzing the call. We're looking at NAGE not just as a successful supplement company,
but as maybe, just maybe, a stealth biotech play.
Right.
And that pharma pipeline. We think it's significantly undervalued by the market right now. So the outrageous but perhaps plausible trade idea really hinges on the timing around that Parkinson's trial, NOPARK, and what management has already set up.
Okay, lay it out. Phase 3 dosing is done. Publications may be a year or more away in 2026. So the trade is...
The speculative idea is this. Consider a long position based purely on the expectation, the hope, really, that NAGE strikes a strategic partnership or a sublicensing deal for the Parkinson's drug before the full data gets published, maybe in the next 12, 18 months.
A deal before the data is public? Isn't that putting the cart before the horse?
It sounds like it, but think about it. Management said they've had preliminary talks. They set up that separate subsidiary. The thinking is a big pharma company that wants into the neurodegenerative space, if they get even a sniff of positive internal data from NOPARK, they might not wait until 2026. They might want to lock up the rights early.
Okay, so the risk is the data isn't good or no partner emerges.
Absolutely. High risk. But the potential reward is huge. It's asymmetric. Why? Because a partnership announcement itself, even without public data, would be massive validation. It would instantly force the market to reevaluate NAGE. shift it from being valued like a consumer goods company to potentially being valued like a biotech with a late-stage asset. Plus, a deal would likely mean the partner picks up the tab for future development costs like those expensive NRT bridging studies for the U.S. That de-risks things massively for NAGE's shareholders.
So the optionality value of a potential Parkinson's drug is just way, way higher than what the current stock price implies based on supplements alone. It's a bet on a deal happening sooner rather than later.
Exactly. It's a momentum trade based on structure and potential catalysts, fueled by the cash flow from the core business. You're buying that pharma option.
Okay, let's wrap this up. Core takeaways from this NAGE quarter. Just fantastic growth, 37% revenue jump. Incredible operating leverage. That 221% adjusted EBITDA surge is the headline there. They raised their guidance, showing confidence. And they're making aggressive, smart moves into clinical channels, and the pharma pipeline seems like it's all firing on all cylinders.
Yeah, it was a strong quarter, no doubt. But the key tension, the thing you really need to watch going forward, actually came from the CEO himself. He talked about the Niagen Plus IV business, the clinic side.
Yeah.
And he basically said NAGE needs the clinics to dramatically reduce the price of those IVs.
To drive volume, right? Make it more accessible.
Exactly, to get more people using it, which sets up this really interesting dynamic for the rest of the year, especially with that potential at-home kit coming. If they do launch that kit with Wells Pharmacy successfully, could they basically disrupt their own clinic partners? Could direct-to-consumer delivery make NAD plus injections truly mainstream by slashing the price?
That's the provocative thought then. Can they crack that code, lower price, higher volume, direct delivery, and really democratize access if they pull that off?
The upside could be huge, even beyond the pharma pipeline. That tension between the high-price clinic model and a potential mass-market direct model is definitely the story to watch in the second half.
Fascinating stuff. Thanks for joining us on the Deep Dive. We'll catch you on the next one.